In India, the number of people investing in stock markets is increasing rapidly. This can be seen from the record number of demat accounts being opened. Recent figures indicate that approximately 15 crore demat accounts have been opened in the country. Shares are held in demat accounts in electronic format. But did you know that you can take a loan against the shares held in a demat account? You can use this for any purpose. Before taking a loan against shares, you should consider these 9 things which we are going to tell you. But first, let's see what share pledging or taking a loan against your share actually means. What is share pledging? The meaning of share pledging is to use shares as collateral for a loan. In pledging, you promise to repay the loan to the lender by pledging your shares. The stocks are kept as collateral here. Despite the shares being pledged, ownership rights remain with you. This ensures that you retain the right to get dividends and that of voting. However, before you repay the loan, you cannot sell the shares at your discretion. When pledging shares from a demat account, you should keep these 9 things in mind. First, typically, loans can only be taken against shares of listed companies. Shares of companies banned or delisted from the stock exchange cannot be pledged. Second, if you wish, you can pledge all your shares, or you can pledge only as many shares as you need to keep as collateral for the loan. If you need a small amount of money as loan, you can take a loan against only a small portion of your holdings. Before pledging shares, make sure to assess your financial needs. Third, pledging of shares for a loan comes under loan against security category. When shares are pledged, a lien, which is a type of agreement, is created. This gives the lending institution, such as a bank or NBFC, the right of possession on the shares until the loan is repaid. Only after repayment you can sell the shares. Fourth, it is essential to repay the loan amount and interest on time. If you fail to repay the loan within the specified time, the lender, which is the bank in this case, can recover the outstanding amount by selling your shares. Similarly, a penalty can be imposed for delayed repayment of interest. Fifth, loan against share is a secured type of loan. It is backed by stocks. This is why its interest rate is lower than unsecured loans like personal loans. For instance, the interest rate on Axis Bank's digital loan against security is 9.99%, whereas that of physical loan, it ranges from 11.5% to 13.75%. On the other hand, ICICI Bank's interest rate for loan against security ranges from 8.5% to 19.5%. Different banks levy different interest rates. Apart from the rate of interest, there are also processing fees and other charges involved. Sixth, loan against stock is often provided as an overdraft. Interest is charged on the amount you utilize from the overdraft limit and not on the entire loan. Seventh, banks apply margins on loans to reduce risk. Margin is the difference between the actual loan of the pledged shares and the loan amount. For example, if the market value of pledged shares is 1 lakh rupees and there is a 30% margin, the effective value of shares would be 70,000 rupees. This means that you will get a loan of 70,000 rupees against the shares pledged, which are valued at 1 lakh rupees. Eighth, there is also risk involved in loan against shares. If share prices decrease, the collateral value decreases as well. In such a situation, the bank may ask you to increase the collateral. For instance, if you have pledged shares worth 5 lakh rupees and received a loan of 3 lakh rupees, and if the share prices decline, the bank may ask you to increase the collateral value. And ninth, the trading and transfer of shares kept as collateral with the lender's permission can be done. Once you repay the loan amount, the shares are returned to your demat account, the pledge is terminated. Under loan against securities, not only shares but also debentures, bonds, exchange-traded funds and mutual fund units which are held in demat form can also be pledged. You can apply for the loan by talking to a brokerage app or your bank. You just need to get the pledging request authorized from depositories like CDSL and NSDL. After that, your loan will be approved.
Now, you too can ask any question related to personal finance on the Money9 app. Do you have a query on stocks, mutual funds or tax? Now, you can directly ask our experts. Connect with them anywhere, anytime. Ask your questions in Hindi, English Marathi, Bangla, Gujarati, Telugu and Kannada only on Money9.